Good morning, everybody. Welcome. Good evening, good afternoon, wherever you're at in the world, wherever you're watching this, whether you're watching it here live with us right here on the BitLab YouTube channel, or if you're watching one of the replays at some point in the future. Welcome to our community. Welcome to our home. Welcome to our family. My name's Kelly Kellum, and I just want to say thank you, everybody, so much for being here with us. Thank you so much for tuning in, and thank you for investing in your education. It's the best investment you can make, especially with this incredible revolution that is taking place right now with blockchain and crypto, and completely reinventing how we engage with the world, especially now that, whether or not we want to believe it, we have engaged into a metaverse sort of living really since the early mid 90s, when the internet really started to take off, and we became more and more digital adopters, straddling our lives into the digital sphere. So with that being said, again, thank you so much for being here. Just I want to make sure we continue to grow this community. And again, I want to reemphasize this. I'm going to be doing this for probably a month or two as we build this community. I really want to help encourage everybody to keep the positivity, within this chat. Keep the positivity within this community. If you have any critiques, I welcome them, but please offer them with constructive criticism rather than just trolling. That's not what this community is about. We're here to empower and encourage and engage with each other. So go ahead and hit that subscribe button, hit that like button, tick that bell down at the bottom. We really want to make sure everybody's getting engaged. If everybody can just give me a thumbs up or some sort of emoji, let me know that the audio, video, everything is a-okay, and I'll be continuing to move along here. I do want to first start over here on the where are we at? Here we are. I do want to start over here on just some of our socials. Make sure, and you can see them across the bottom here, where it's at Academy BitLab for Twitter, which you can see right here on the screen. Make sure you're following the right Twitter page. We're posting stuff, trying to post as much as possible there. I actually shared a chart that was also in the BitLab Insiders Club newsletter, which you can get at bitlabacademy.com. Which is here. You can come here and you'll see a pop-up that pops up on the page. And right here, if you enter, you'll be signed up for the newsletter, which we put out free updates, free info. Also, so I sent out some signals this morning and some context on the market. And you'll also currently, people that are signing up right now up until the end of next week, you will also be entered to win five different opportunities for lifetime membership to the BitLab Academy courses, which we have a huge amount of stuff coming to. We've got over 25 new courses, 200 new lessons. I'll be rolling out here very shortly, along with the new website. So to keep on moving along here and get right into the content, get into this, the secrets to making profits, the secrets to consistently being confident in your trades, confident in your investments, understanding what's going on with the market. We're going to be covering all that, different ways to engage with the charts to make sure that you're getting the best context of what's going on in the market in multiple contexts, from different time points, different time views on the time frames, on the charts, as well as the different sort of tools you can use along with those different contextual looks at the market, so that you can have the best sort of action plan and best sort of strategies to engage with this market, so you can do it confidently, as I said, profitably over time. So continue moving along here. You can also follow my Twitter here, which is at Kelly Kellum. You can see right here, it's Kelly Kellam, and I post a bunch of stuff all day long, every day. And I want you to check in as much as possible with this chart it's pinned at the top of my page. It's always a good thing to check in with, and this is going to tie very, very heavily into what we're talking about today, and being profitable over time, how to be a profitable trader. And if you're not a trader, what about being a profitable investor? Rather than buying at tops and selling at bottoms, or buying and then the market shakes about and you don't know where to buy or sell. Well, all this comes with experience, which, if you're here, you're benefiting from the ability to gain experience from other people like me who've been in these markets for a long time, so you can learn from our mistakes, so that you can circumvent those problems that we've had, those losses, huge losses that we've taken early on, so that you can start with a much stronger foundation and be much more profitable over time. Now I need to adjust my screen here. Okay, this is right here. already. So now one of the things I do want to also encourage is to get involved with the Discord, which you can go to, and I'll post it here in chat in a moment, but come over to the BitLab Discord. We've got a huge community here, which you can see all kind of different channels, different support, different one-on-one engagements, TA, charts, analysis. We even have a whole section just for the BitLab trading stack, which is all these new indicators that we've put out recently. We have training content, we have strategy, we have analysis. There's so much stuff that's in here. So you're definitely going to want to check that out. So welcome to the stream today, everybody. And I'm excited. And I do want to address one thing because I think it may become a little bit, I don't want to say confusing, but I want to make sure people understand what's going to be happening here on the channel, especially. This is our third show. This is our third stream. And this is all about pushing education, pushing knowledge forward. It's not just about pulling up the charts for the day and saying exactly what's the price going to do in this moment. Now, I will use contextually what's happening each day with what's going on in the market, and that's going to kind of help as we're starting here, inform me as to what are some very relevant topics that not only are going to be relevant today, but are going to be evergreen content that are going to be, you can check back on this exact video in 3 months, 6 months, or 3 years, and it should still be relevant because the daily context of what's happening and how we're attacking the market and addressing and readapting our action plans and our strategies for the daily occurrence in the market. We can always take those sort of lessons and apply them to other scenarios throughout the other parts of the cycle, throughout other things that are going on in the market. So yesterday I did a fairly in-depth, not entirely, but fairly in-depth, basically breakdown of using TradingView and charting and how to really set up the templates on your chart, and as well as how to go through and use quick keys, you know, the option H for horizontal lines, option J for horizontal raise, option T to do your immediately trend lines. And you can check back on that video, and on the replay of this video, I will put a link up at the top for you to click on, but that's on the channel. If you go into the live areas, the live playlist, you'll see the how to chart like a boss, I think is what it was titled, or how to chart like a pro is what it was titled. So definitely check back on that. At any point, it's going to be relevant through your entire trading, investing, and charting sort of journey here within crypto. But that being said, that's only one aspect, and that's obviously a little bit of a beginner's approach. And today is going to be a little bit more advanced. But my goal and my mission here is to address it to bridge that gap from beginner to pro. And so you can also you can refer back to it at any stage in your journey. If you're wondering where we're at in the market, what you should be doing, what should be my action plan right now, whether you're in the middle of a bull run, whether you fear we may be near a top and maybe you want to scale out, maybe are we at a bottom? What are the action plans that we engage with at those various levels? And so my plan moving forward, especially going into next week, and again, this is going on for infinity, baby. This is a community. And that being said, it really helps to build the community when we have these streams. If you do enjoy what's going on, hit the subscribe button below, tick the bell, hit the like button. All those things really, really, really help to engage with the YouTube algorithms, so that we can be relevant amongst the sea of other information that's out there. And what we're trying to do here, we're not trying to make money off you, the community. We're trying to make you, the community, money. We're trying to give you those strategies. So all these things really help build our sort of relevance within the YouTube algorithm and help us really build in that regard. And also, if you ever want to share the stream onto your Twitter or to your other friends or family, really appreciate it. So thank you for being here. Everybody go ahead in the chat. I'm reading it as I see here. A shout out to Crypto Vet, shout out to Mitch Shaw, Alex Green. I've seen a number of names that I see all over the place. Crimson Caravan Company. We got so many people in here, and we really, if you're watching this later, or if you're watching this through one of our partner brands like Hit Network, which is actually our parent company, we restream all these, definitely come and give BitLab Academy a follow. Come get engaged in these live chats. We try to make this as much as a community vibe as possible. Sometimes I get completely locked into the lesson and I forget to check in with chat, but we've got an incredible community here in the chat engaging. So definitely get in here and do that. Really appreciate you all being here. It is January 13th, 2023. We're living in the future, everybody. And not only are we living in the future, all of us are obviously active participants in the biggest development and opportunity and I think multiple lifetimes with blockchain and Bitcoin. So let's dive in and figure out how we tackle this, how we tackle the contextually what's going on in the market and what tools that we can use. So everybody go ahead, type in there where you're from. I'm curious to see where everybody's tuned into from around the world. And we're going to just dive right on into this. And again, welcome, good morning, good afternoon, good night, wherever you're at in the world. This is BitLab Academy. My name is Kelly Kellum. You can find me at Kelly Kellum on Twitter. And other than that, let's go ahead and get to it. So here we are. I'm going to go ahead and pull up my screen here. And crypto Twitter is phenomenal. If you're not using it, I recommend starting an account just so you can get, there's so much free content that you can compare and contrast. But I'm going to start with where I left off before, and that is this chart right here. This is everything in understanding where we're at in the market, identifying what sort of trend we are in, meaning in a trend, for any of you newcomers, a trend is, are we in a bull trend? Is a price generally and consistently moving up? Are we in a distribution trend, meaning we've already moved up and price is sort of consolidating, meaning the price is no longer pushing up. It's people are taking profits, they're buying, they're taking profits, they're buying, they're taking profits in a very consolidated, meaning fixed sort of range. It's not making new highs. It's not particularly making new lows. On into the charts. So what do we want to do? What is the purpose of this stream? This stream, as I said, this particular stream, it's a secret of making profits, a secret of consistently driving forward confidently in the markets and knowing how to navigate each turn, knowing how to navigate when you're here at the top of the market. In this case, this was, I think, around the $1,200 peak in right here in 20, when was this? Yeah. This peak right here was, we can actually mark this out. If we come here, right on this mark right here, we could do a price label. This peak was 1154. This peak right here was 1927. So what do we do when we're at these peaks? Because as all of us have done at least one point in our life, we bought it at the top and the market's gone completely down. That's generally kind of the entry point, unfortunately, for most people in the retail aspect of the market. And that is 95% of the market. Participants are retail participants. They tend to be less informed. They tend to be less, more emotionally driven, and they tend to not trade on data. As I said, they're trading on emotional reactions, and also hype, and also not having an action plan, not having risk management, not having any of these things in place. So, you know, when people are buying in at the top, why are people buying in at this top of the market? They're buying in at the top of the market because as the price goes up past previous all-time highs and the all-time highs for beginners out there, this channel is about bridging that gap from beginners to pros. So we have to make sure we always throw the elevator back down. The all-time highs is when we're, say the market's right here, say the market is right here. This would be, at this point, this is not an all-time high because it has not broken this point. So as this market is moving along, each point that we break past this, each step of the way is breaking the all-time high. And what happens at this point is you start building this hype cycle. Now that you break in a previous all-time high, which some people would have argued, and you see it even happening right now with the market being so low today, January 13th, 2023, okay? We're seeing the Bitcoin is dead. This is an inverse of the all-time highs. You know, oh my God, I can't believe it's gone so high. And then all of a sudden the news media starts selling it. The news media starts saying, can you believe this? All this hype train starts building in and the market goes parabolic like this, meaning we're having a bullish trend that's going higher and higher at an increased rate, creating a parabola, which is, you know, you're having a bull market, and then you get a parabola when you start going higher and higher like this, which we've seen in all these previous bull markets right here, going up. We even had a parabola right here on this push up, which did not break all-time high. We had another parabola right here to previous all-time high, these last all-time highs, right? So what happens is this high cycle comes in, and everybody starts buying because they're going to be a millionaire, not realizing that the data is showing a ton of signals that this is the time to take profits for profitable traders. And unfortunately, this is when all the hype cycle, this is when the retail is buying in. And similarly, when we look at where we're at right now, I'm going to delete these. When we look at where we're at right now, and I'm going to zoom in here a bit, we're at these, we're at these lows. Oh my God, it's going lower and lower. And there's so many different instances of Bitcoin is dead. Now we can even put this up here. Bitcoin is dead. There is a website here, 99 Bitcoins, which we can see. Bitcoin has died 469 times. Now, what is this calculating? This is looking at all the different major news media outlets out there that are declaring in headlines and in news media broadcasts and multimedia, on air as well, on streaming content, TV, major publications, how many times Bitcoin has died. Okay, now if we look at this and we zoom out here, let's look at all. Look at how many times Bitcoin has died. News media is not the media, standard traditional media, what do they call it? I can't even remember the word right now. These are not the people to follow. This is not the data to follow when informing your trade decisions. What you want to understand, and you're going to feel like you've seen this before, I'm sure of it. This is what you want to understand. Ignore news media. There is a place for it, which we will cover in future streams, and also we do cover in the Academy. But what we want to really pay attention to is data that is presented to us, data that's available to us, so that we can make smart decisions based on data, not decisions that are based on price action. Price action, as I said in several streams now, and I've said it multiple times on my Crypto Answered podcast, which is price data that we're seeing, where the price is on a chart. When we're looking at what's happening every day, if we come in here to the 24-minute chart, this price action, if we're just looking at this 24-minute chart, look at this. We're only in a bull trend. This is a bull trend. And this goes back to what I was saying before. Context is everything when we're talking about what's happening in the market, and understanding the context of what's happening gives you an idea of what to look for on the chart, what tool set to use, and how to engage what particular action plan, what particular strategy. So in this case, on the 24-minute chart, we're in a bull trend. Whereas if you look at news media, Bitcoin is dead. Okay, why is Bitcoin dead? Because those people are not looking at the actual data. In addition to not looking at the data, they're also looking at things that don't inform the greater good of blockchain and crypto, which is that the fact that Bitcoin and crypto and blockchain are threatening the very existence of traditional fiat currencies around the world. They're threatening the very existence, undermining currently, because the big banks have not fully embraced Bitcoin and blockchain, but currently at the state of things, Bitcoin and blockchain are completely undermining the status quo of traditional finance. So news media, which is underpinned by traditional finance, is trying to push this narrative, this FUD narrative, saying Bitcoin is dead, and they do it time and time again. And there are people out there that FUD out of the market. What is FUD? Fear, uncertainty, and doubt. It's ill-informed narratives that are sculpted to push you out of the market. They're literally manipulating you. We're talking about market manipulation in markets. Well, the manipulation starts with people being informed by emotional trades and ill-informed data sets or lack of data sets. That's what manipulation in the market is. Don't be a part of that narrative. That's what we're here for today. That's what you're here for every day on BitLab Academy. These daily streams every day, 10:38 a.m. Eastern Standard Time. So diving back into this, now we're going to go back out to the 3-day. Actually, we're going to come all the way out here to this market cycles chart. I went over this on the TradingView course that I did yesterday. If you're watching this on one of the replays, I am going to put a link up at the top to click through to that. You can also find it in our playlist on our channel. If you just go to BitLab Academy channel here on YouTube and go to the live area, you'll see the chart like a pro video and lesson, and you can sort of go through that. But the point here is, there is a I don't want to say fix, but there's a standard sort of outline to how every market cycle works. Now, this is very important because communication is everything when we're talking about what's going on in market cycles and where we're at, whether we're in a bull trend, whether we're in a bear trend. Because if I'm talking about us being in a bull trend, looking at that 24-minute chart, you know, which we are in a bull trend on this 24-minute chart. In fact, we've gone parabolic. But if I'm talking, if I post on my Twitter, on my crypto sort of Twitter account, and I say, hey, everybody, we're in a bull trend, 99% of the people are going to be like, what are you talking about? We're in a bear trend because of this massive sort of, look at this. This is the bear trend that we're in. We've been in this bear trend all the way back since November of 2021. Now, given we have had a push up, and this is specifically what I want, this sort of setup with what's going on in the market is why I chose this topic for today, because whether you're watching this today, January 13th, 2023, or 6 months from now or 3 years from now, this is going to be relevant no matter where you're at in the trend, because this is very important. There's a lot of people that see these you know, few green candles out of this sea of red. They see these green candles and say, oh, the bull trend has started again. Well, it very well may, but the context of this market in order to be profitable is very important. So let's go ahead and dive on into that context. And here's what it is. I'm going to go back to the basics over and over again, because this all starts with the foundation of everything, the market cycle, where are we at in the market cycle? And this is the first step you want to look at. And now what I mean by this is you have to divide it into a couple sort of contexts. You have to divide it into time frame, and then also contextually what's happening geopolitically, geoeconomically with where we're at in the economic sort of market cycle. In this case, you know, right now in January 2023, we're still in a massive sort of downtrend that we're fighting with on the Dow, on the basically traditional markets. But in this case, we're looking at this massive sort of market cycle. And when we compare that to where we're at in this market cycle, we very well, where I am pinning this based on what's happening with all these other data sets is I'm thinking that we are somewhere between here and here on this market cycle, meaning we very well could have another dip to go down, but we also need to plan for already being in this bottom zone, this accumulation zone, which means what does accumulation mean? It means to gather. It means to build, right? So this is accumulation zone because the market makers, the larger market participants, the people that can really move the market around, they're you know, pushing the market up to get people to buy, and they're also buying in these lower zones. And then at these points, they're taking profits off of all these people that have bought in, and then, you know, causing these forced liquidations, meaning people that have leveraged longs, they push past their stop losses, or if they don't have stop losses, their liquidation points, meaning they're forced on a leverage long, they're forced to sell because it's pushed beyond that. So you get these cascading liquidations that then push the market back down, and then everybody gets scared again. The market continues pushing down further, and then they buy again. And then the market sort of rinse and repeats back and forth while these big institutional players and smart traders, which is what you all are going to be, they are taking advantage of this. They're buying this dip, selling this rip, buying this dip, selling this rip, until at some point we will break through. The problem is with most traders, the problem is with retail, is every time we drop, they think we're in an accumulation zone. Every time we drop further, they think we're in an accumulation zone. And then we get to the point where we're actually in the accumulation zone and there's no dry powder left. There's nothing on the sideline for you to deploy to take advantage of these actual lower prices. Or you have so little dry powder, you've been so depleted by doing this each time that you don't have, I don't want to say meaningful, but you have comparatively less meaningful money to take advantage of this. And these zones, as you can see, this is the same zone here on the left side. These zones are life-changing opportunities when looking at this market cycle on the macro. Now, this market cycle also is very important on every time frame. It also happens on the micro as well. If we look at this, we have a bottom sort of W formation accumulation zone. We break this previous high, we break this previous high right here. Once we break this, we don't immediately buy. A smart trader doesn't immediately buy. You don't front run the breakout, because what happens is if you do that once and you win that trade, you make profits, great. But when you're trying to be profitable, the key word is profitable. And then the secondary follow up to that word, and to be profitable, is the word consistently. To do these things in tandem, you need to practice risk management. You need to practice healthy strategy that you can replicate over and over again. And it doesn't matter if you lose 49% of your trades, because you're winning 51% of them. Now, there's a whole nother strategy to that, which we'll go into in a little bit. But the key here, again, is consistently profitable. So we're waiting for these trade setups to where we're at the end of a downtrend into an accumulation zone, and then find that buy zone to come up. Now, here is the secret sauce with this. As I said with these market cycles, there are these same market cycles, rinse and repeat on every time frame. And so when you really want to find your edge, the goal is you don't need to just look at the macro. You don't just look at this, let's say weekly, and I'm going to hide all the drawings here. We don't just look at this market cycle from accumulation zone. Okay. This is the accumulation zone, which we see here. And we don't look at that only. And then this is the top distribution zone. The same thing, bottom accumulation, top distribution. This was an outlier. This was the pandemic market crash in March of 2020. But still, even within this, I guarantee you we could see the same market cycle that happens. So my point with all this is we utilize as a tool these time frames, which if you haven't set them up yet, you can set up your time frames here across the top, or you can come here on the, click, select whatever time frame, select this, put your stars here, and you have multiple time frames. And if not, that's fine too. But the point here is you want to utilize different time frames. You want to first start. Why it did that? Boom, 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 boom. Okay, here we go. So we want to first start looking at our macro time frame. Okay, in this case, we're looking right here. We have the accumulation, distribution, accumulation, distribution, and we have these market cycles repeating over and over. But when we're trying to identify this bottom right here and where to enter, at what point in this section right here do we find entry? Now, and I want to make a note here that's very important. It's very important to understand the context of what type of trader you are. Are you day trading? Are you scalping multiple trades within a day? Are you multiple trades within an hour even? Are you a position trader trading longer positions over a period of time? Or are you an investor? If you're an investor, then this, honestly, anywhere we are right now in this accumulation zone is, for me, a buy zone. Anywhere under the short-term holder cost basis, which I'll pull up in a few minutes, is a buy zone. But when you're trading and you're trying to find these entries to play this all the way up and then sell this all the way down, then what we can do is we can utilize this map and then divide our time frames down and then identify these smaller market cycles within these smaller time frames. So when we're doing that now, let's go ahead and do that. I'm actually going to pull up a different chart, a clean chart. Let's see if this is a crazy chart. Yeah, this is a crackhead chart right here. Now I'm going to, here we are. I'm just going to go ahead and, okay. So now we're going to come into the 8-hour time frame. So we can see this is still a downtrend, and I'm going to remove these EMAs for the time being, these 4 moving averages that I had. So we could see this very consistent downtrend that is coming down right here. This is a downtrend. What we're looking to do is catch this flip as early as possible, but with safety and risk management, to catch this flip to the upside. And we're going to make that green because that's what we're all looking for right now. We're looking for that green. So I'm going to double click on the screen to minimize those other indicators. Now, removing this large candle. Now, what we're looking for now is something here that mimics this sort of setup right here. This is also very similar to the Wall Street cheat sheet, and I pulled this up the other day. This is just a sort of different sort of take on this right here. We're looking to find this boring zone right here, and this is the problem with 95% of traders is they don't look for this. They get excited here, this thrill stage, they buy, and then they're super greedy and they're euphoric, so they don't sell because they want more. And when it dips, they think it's just a dip just like this. And they just want more, and then they end up losing it all. And then because they lost money on the trade, which they don't realize they haven't yet, they sell out somewhere down here, and that's when you lose money on the trade. And then it takes them until the next cycle all the way to this point to buy again. That's what we are preventing. That's what and as long as I've been trading, I still have to fight with myself about reminding myself about all of these factors. So I want you to regularly visit this chart, and ask yourself where we're at in the cycle on the macro, meaning a week, a 3-day or week or larger time frame. And then ask yourself, where are we at on the daily? And then zoom down, ask, where am I at on the 4-hour? And then you can divide that down to the 1 hour within the context. And you want to wait until all these things start to line up. In this case, we have on the let's look where we're at on the weekly. On the weekly, and again, what we're trying to do is we're trying to line up a pattern that fits this framework right here. The downtrend has been established, and we're starting to see signals that we're moving out of this downtrend into an accumulation zone to break out. Now we can use, in this case, what we've been using up until this point is just chart formations, okay? Meaning the patterns of the candles on the chart and what the momentum is looking like moving downward. In this case, we see the momentum has been growing, meaning the candles are getting larger coming to the downside. But what I'm noticing immediately on this chart is we're also seeing now these drops are starting. This is bigger than this, but in general, these drops here have been on average smaller than these massive drops that we're seeing there. So there is a shift in trend or a softening of momentum coming to the downside here. And this also works when we're in a bull market, when we're looking here. So if you're watching this in the future, this, and I pointed this out on the TradingView charting like a pro stream yesterday, but we're seeing this momentum. You see how much before we have the rollover, and now we have a much larger, and this is even larger, but then we get that gear shift right here. So that's a signal gears are shifting. This is even smaller. This is even smaller. So we're seeing without any other indicators other than the charts on the screen that the gears are shifting. So to be a profitable trader, what you need to be aware of before you put 100 different indicators on your screen, before you do anything, become intimately aware. Become intimately knowledgeable about what's happening on the chart with whatever asset you're trading. Be aware of the momentum. Before you pull up a momentum oscillator, you have the momentum visually represented right here on each chart. And I can press, and I pointed this out also on that charting view, the charting stream. You can press shift, click on the screen, come over here, click. Why is this locked out? There we go. Click shift, click on the screen. You could pull up a measurement tool. So that's a 73% increase, okay? Now here, we can go shift, click on the thing, come up. That is a 113% increase. Same thing here, shift, only 80%. And then same thing here, 14%. So the point being, even if you don't understand just by looking at that, you can use these measurement tools. You can press shift or come over here and click on it. And you can just see when the percentages start growing or shrinking, that means momentum is either increasing or decreasing. And momentum is everything in markets, because momentum is very much like, markets work very much like E equals mc squared, I think it is, you know, Einstein's theory of relativity, and, you know, theory of motion and kinetic energy. When you put something in motion, it takes equal or opposite force to stop that from being in motion. Similarly, when you start building this momentum in a chart, in this case, we built momentum to the downside, we need to start having a loss of momentum is the first signal. And then separate from the loss of momentum, the next thing we can start looking at is volume. So before we divide this out into smaller time frames, we can look at volume. So we're going to go ahead and pull up volume. So VOL. So boom, volume. Now we can look at volume, and what we can see here is over time, and I'm actually going to double click on this. I'm going to double click on this, and what do I want to do? There we go. I'm going to add the moving average right here, and I'm going to make it yellow. See, this is how you can customize your stuff so you can really understand and see it. I'm going to do this. And so what we're looking at here is what's going on with the volume. I'm going to delete these two indicators, because what we've seen on the weekly is increased volume into a downward momentum. So what we're looking for is a loss of momentum, and then also we don't want to have a lot of volume with downward price action. We want to start having less volume with downward price action. And then the caveat to that as well is we want to start looking for increased volume for sideways movements and for price action that's moving up. In this case, we're looking at the weekly, and we will do some basic trend lines here. So we've got this trend line right here, which this is almost pressing up against, and we're going to do a trend line here, which is a major trend line. I'm going to kind of do it more like that because it catches more candles. The more candles it catches, the more accurate that sort of trend line is going to be. And then there's one more trend line I'm going to draw, which kind of I can see is kind of an intermediary trend line that's right through here. And I'm going to make this double click. I'm going to make this gray. Obviously, I'm going to make it lighter gray so we can see it. And make it smaller, just so we can see that it's there, but it's not as major. And look at where we're at right now. Everybody's very excited about this bull run, and we want to be profitable traders. So you could front run this, but if you're going to front run it, have very tight risk management, have very tight stop losses. And I'm going to do a whole video on trading stop losses, setting stop losses, all these things. But just know you need to set stop loss on this, because this very well could, just looking at this, look at this. This was support, but this has been rejected. And right now, this is the moment of truth, whether or not we're going to break out from this. And then in addition to that, we still have to look for the breakout here of not only this trend line, but also right here. We very well could break out of this and then get rejected. This could be a bull trap. So we need to have patience and planning, and we need to adjust our action plan accordingly and do it over multiple time frames. So now we've looked at this and we want to be profitable. That's our goal. So we want to see if there's a trade setup that's coming by looking at smaller time frames. So here we are on the weekly. Let's come down to the 3-day. Okay, this is just by nature, this is only a 2-day candle. I'm actually going to come down to the 1-day. So we have increasing momentum into this resistance right here. Now, you don't want to buy into a bunch of green candlesticks until you get some sort of a pullback or stronger confirmation signals to buy. In this case, what we're going to do now is we're going to start, we can see right here, what did I say? We're looking for increased volume into greenish candles or bullish movement. We're not really seeing that right now. We're getting a little bit of an uptick here. This is on the daily, but I'm guessing if we come down to the let's go down to the 4-hour. Now we can see that there's an uptick. There's an uptick in volume that's starting to support the move, but it's not saying a whole lot about that move. So now what I want to do is I want to come in and set up a couple indicators, basic indicators to look at this. And then we're also going to look at we've got about 12 minutes left. So I'm going to be moving through this rather quickly, but I am going to expand on this in future videos. So don't worry about that. We're looking for profitable trade setups and how to be profitable consistently over time. And as I said, we're looking at the context every step of the way of where we're at in this cycle. We've already identified, we think we're down about right here. So now we've divided from our macro setup, And our next step in the process is to smaller time frames to try to find the edge, try to find something where there's a trade setup that's supporting larger, that's leading into larger term movement. So what I'm looking for right now on this 4-hour chart is we've broken this trend line, but I do want to make note of that trend lines tend to be more regionally biased, so they're not fully exact. As you can see, this hit right on it. Awesome. But trend lines tend to have, regionally above and below them, a percentage of movement that the price can move back, and what's known as a fake out. You don't want to just, because we broke, you buy, because what tends to happen a lot of times in cryptos, especially if you're trading Forex or stocks, this happens less often. The markets aren't as volatile, but with Bitcoin and crypto, and especially altcoins, and the smaller down the market cap you go, the smaller down coin market cap, if a coin's number 300 or 400 or 500, the more volatile the coin's going to be, and the more easily manipulated it's going to be. And people buy into hype. So when you break this trend line, you don't immediately buy. What you want to do, refer back to the cheat sheet. What happens when you break the trend line? Look at that, broken. But, oh, you're missing out on profits. But are you? Or are you just being patient and having good risk management? You're waiting for this to come back and retest somewhere near this region, and then show a reversal on that very small time frame, and then you buy either here or right here. As you can see, you either buy on that retest for very aggressive with a very tight stop loss, or you play conservatively if you want to be very consistent over time and not get number one profits all the time, but always be profitable. You wait for this retest, which is this right here, and then you break this previous high. So in this case, right here, what we're looking for is this to come back, which it's done. And then you can buy, but I would only do it, and this is not financial advice. The strategy here is the advice. The goal here is to make a very tight stop loss in case this is a fake out, if this is what they call a bull trap, meaning people buy into the hype and then it rolls over, and then now they got your liquidity, because remember, for you to buy, somebody took profits there. Now, remember what I just said. For you to buy, somebody else usually took profits. Either way, they've sold there. For you to buy, there has to be a seller. And more often than not, in these bull traps, the people that are selling to you are people that are taking profits on this move right here to this move right here. They just made a, what is this profit? A 17% profit. And then, you know what they did? They weren't greedy and said, okay, I'm going to wait for the entire, no, they took profits. And this is what I'm really encouraging you to do. Take profits. And I don't want to use the word suckers, but all of us were suckers at some point. All of us were suckers at some point in our journey. Just let me know if there's any glitches there or anything. CryptoVet, you can text me if there's anything, because I'm seeing a little bit of an error on my screen here. But you want to take profits and then let this roll over. And then if it does come back down and it finds support and then retest support, then you can buy. And then you took profits, you have a larger bag to trade with, and now you can take advantage of a lower price with more money in your bag, to more money in your holdings, in your trading portfolio, to make more profits going up. And you do this over and over and over again. But so what you want to do right here, here's the secret sauce. What you want to do right here is you want to ask yourself, is this rolling over? Well, then we can come in, we can add RSI, and you can use, I'm just trying to break these things down very simply. You can use all these things in conjunctions with indicators as well, but I'm trying to break it down to the most core things, which is understanding the candles and the process to where they are at within their trading cycle. And then within that, identify where your trade entries and trade exits are, where your stop losses are. Okay, so now we can add the relative strength index and the MACD. And I'm going to be going over all these with videos as well, but these are essentially moving averages, are they moving further apart or closer together? Meaning, are things building momentum or losing momentum? And the RSI is essentially the strength of the buying pressure within the market. So we could see right here, this is what's known as a bearish divergence, because we have these kind of going lower while this is going higher. And again, I'm going to do a whole video on divergences, but what this is showing us, and I'm going to make this red so we could see it. What divergences show us is, as price action is moving in one direction, is the momentum, the buying pressure, the activity building in agreement with that or shrinking? In this case, the price action is being pushed up, but the strength of that pressure is moving downward. Therefore, there's a signal there that maybe this is a false move, maybe this is a fake out. So now we come down to the 1 hour. We're trying to identify now in the small time frames, are we in the top of this cycle on the small time frames so we know we want to exit, or do we feel like this is most likely going to bounce and hold here? So now I don't see anything clear yet. We're still seeing, what we're seeing is this push up, which is this still right here. So what we want to do is now we're going to come down to the 24 minute. Okay. So we are seeing these push-ups. However, what we're seeing right here, this is what's known as a doji candle, which is indecisive, which is bearish when you're talking about upward price momentum. Very similarly, if you're looking at a downward movement, for instance, this was downward right here. This is reversal. This is reversal because there was downward momentum, then it went neutral, meaning the bears were losing control. So you're identifying, your goal is to identify this neutrality, this change of trend, so that then if you're scalping this, then you could, scalp that to buy. Now this does sort of roll over, but then it comes back up. So you're trying to do this on very large time frames with your macro setup, and then divide down to these smaller time frames to identify where the best trade entry is. Now, I want you more than anything to be patient in this market. And I want you more than anything to, whether you use this chart, share this to your friends, find other versions of this chart, and really take it to heart, because it really talks about, what these some of the terminology is. These red X's and green X's are, identifiable where you start looking for trade entries, where you start looking for trade exits. Okay. And why I say start looking is because we're looking right here, because this is an aggressive move for a more pro trader. But this is where you start looking, because you are waiting for that identifiable place where you're breaking that previous high. Now, that is a very conservative, consistent way to trade. As you move along your journey, you very well can start seeing these and be confident in having tight stop losses and buying each time that happens and maximize your profits. If you're talking about consistent, conservative profits, which will incur you much more losses over time, much less losses over time, then you're going to want to try, I very much encourage being patient first and master this. Once you master this right here, where you're waiting to break the previous high to buy, excellent. Now, I am not encouraging you to do that on the macro. I'm not asking you to wait until right now the previous all-time high is 69,000. That's not what we're talking about. We're talking about the macro context gives you an idea of what the macro trend you're in is. So you know what trend you're trying to fight your way out of, or trying to make sure you're continuing and supporting. What we want to do is identify the macro trend on the major scale, break it down to the smaller daily time frame, see where we're at there, and then break that down to the 4 hour, the 1 hour, the 24 minute for the scalpel to identify the exact trade position. Now, that's going to be about where we're at on today's stream. We've gone through so much stuff here. I really appreciate y'all being here. I see somebody said they don't understand the English. There is an ability on the bottom there's a CC, or I'm not sure what it is on your screen. On all the videos, we're trying to make sure that they are available to have closed captioning. So you should be able to do that. So go ahead and do the closed captioning if you need. You can watch this back as well. And if I speak too fast, watch this back at any point, and you can slow down the speed. so you can break down each thing here. I really appreciate y'all being here. I really want to just say thank you for building this community. Thank you for being positive. Thank you for being a positive force in this space. Please like, subscribe to this channel, ting that bell so you get notified when we go live. We really appreciate it. Again, my name's Kelly Kellum. You can find me at Kelly Kellum on Twitter, but also make sure to follow all these socials. Down here on the bottom of the screen, you can see right here, follow all these socials, stay in contact with us, get on the BitLab Academy website, join that newsletter. We just sent out another one today with some signals. We got a bunch of stuff coming to BitLab, so get involved with that. And then, of course, check out those indicators we have. I didn't break them down today. I am going to break them down. I'm actually going to do, I think, a second part to this video this weekend, so everybody can get a little more in depth there on some of the other signals that I wanted to share. We are, of course, supported by Hit Network and the BitBoy community, BitBoy crypto community crew. So as we wrap up this stream, I just want to encourage everybody to head over to BitBoy now. Tune in there for all the news of the day. If you're watching this later, then tune in to BitBoy Crypto anytime. We love you guys. Thank you so much. Have a wonderful day. And just remember to stay positive. Be a positive force for anybody you interact with. If you have criticisms, even online, on Twitter, anywhere, be a positive force, offer constructive criticism. I'm trying to be a force in the space that encourages positive change in this social world that we live in, this social media world that people are, I don't want people to be keyboard ninjas and just hide, but be a reason that you uplifted somebody and gave them meaningful engagement of their day. And with that, that's all I got to say. I hope you all have a wonderful day. Adios, muchachos. Over and out. Over to BitBoy Crypto. See you later. Goodbye, everybody. Thank you for tuning in. Hit subscribe. Ding that bell again. Adios, everybody.